Let's start with AutoZone, though. First quarter profits up 14%, same-store sales up 3.5%, and a year ago, they were putting up quarterly profits of 15% and comps of more than 4%. So these are good numbers on top of a year ago good numbers, and this thing's a machine.
Can we just roll whatever I said last quarter? I think because we talked about AutoZone, it does. I love this company. We have it in one of the funds. It does everything right every quarter, more or less. It is same-store sales up between 3% and 4%. They open a few more stores, so total sales are up 8-9%. I'm guessing because I don't have that data in front of me, but they open enough stores that they grow faster than sales. Then they improve their margins, so net income usually comes in sort of low double digits, and then they buy back shares. And so you get to mid-teens, 14% earnings per share growth, and they just do it over and over and over again. And so a little quiz. Do you know what percentage of their shares they've bought back since 1998? You don't.
I don't know. Yeah, the short answer is no. No, I
80%. 80% of their shares. So just every year they buy back between about 6 and 10% of their shares. And that compounds tremendously, and it takes the pressure off the company to grow store count too fast. They grow shareholder value. They're not solely focused on let's have the biggest company we can have, which you would do by retaining your earnings and making acquisitions and doing things like that. Instead, they're focused on shareholder returns.
This is one of those stocks that I think, particularly for anyone who is just starting out investing, this is one of those stocks that gives you sticker shock because they haven't split their shares in over 20 years. And so right now, shares of AutoZone are trading just below $800 a share. So you look at that and you just go, well, gosh, if I've got $800 burning a hole in my pocket, I can buy one share. And let's face it, that's not fun. But I think that's to their advantage, and I think that's to the advantage of long-term shareholders because they just think, yeah, it's not fun to own one or just a couple of shares of stock. It's not the sexiest business in the world. But to your point, they've got this smart, long-standing management, and they're just delivering year after year.
Yeah, I think that if they are, as they are, the biggest purchasers of their shares, having bought 80% of the number of shares back over the last decade and a half, it behooves them to have a stock price which maybe takes a few marginal buyers out. That allows them to buy back more. It's hard to argue that they're buying back at a great price right now, but they buy back all the time. So they're going to have some high prices some of the time. They're going to have better prices some of the time. Right now, there's a lot of enthusiasm priced again into the stock, as it seems like there always is, because it doesn't give you many bargain opportunities.